All right, Ken Orange Theory Trader back with you. Just going over some drills here on how you can quiz yourself to see candle 3 and candle 4 setups. So let's not waste time, get right into it. This is just about recognizing the structure, not necessarily about entries and exits. Let's just say, for the sake of this discussion, you always want to be in around the open price of each candle that you're trying to trade. I'm going to do a few on the daily and then a couple on the 8 hour. And I'm just going to do pound New Zealand. Why pound New Zealand? There's no specific reason. I'm not saying this is the best pair to trade. So yeah, that's that. All right, so we're going to just do a random bar here. The only indicator I'm going to use is this mark level. So it's going to be showing me the high of the day, high and low of the day, daily open price, weekly open price, and I'm going to do high and low of the week as well. So here we are. We're back in 2018, looks like. So let me just make a quick amendment to mark level so I can see the high and low of the week. And I only trade candles 3 and sometimes candle 4 if there is one. All right, so here we go. I'm going to start with a fresh week. So this is Wednesday. So we'll do Thursday, Friday. All right, so here we go. All right, so this must be a holiday or something. I'm not sure what's going on there. Oh, I'm sorry. This is the daily chart. My apologies. Okay. Okay, Thursday, Friday. Okay, now we got a fresh week. Okay, so here we go. So you come to the chart. All right, and I mean, if you want to take a look at the week in the past, you can. So I do see a candle 4 set up right here. This was the candle range high, candle range low. And the more practice you'll get with this, the more you'll be able to recognize them in hindsight. This was a 2 candle range theory high. This was a 2 candle range theory, though, because you had candle 1, and then I say candles 2 and 3 are just included in this large candle, which sweeps the high of a candle and then closes beneath it. When that happens, then I look for a continuation, which you did get right here. So if you would have got in around the open price, that would have been good for 96 pips. Okay. So that would have been a good deal. So I wouldn't try to trade this candle. In this case, though, this would have been really the only trade I would have been trying to take, a candle 4 setup on Wednesday. And that's it. All right. So fresh week, mostly consolidation for the rest of the week. Got a couple inside bars. So let's see what we get for the next week. So here is Monday. You got another inside bar. Okay. So Tuesday, we do have the high being swept right here. So it could go either way, but let's see. All right. So you'll have that where sometimes you'll mark a high and it gets swept again, right? So this would have pretty much been a stop out. Once the high of whatever you think candle 2 is, once the high of it gets broken, that's it. It's null and void. Okay. And you have to wait for the next day, at least on the daily. All right. But now you could have a new range here. What was candle 2 now becomes candle 1. So you got candle 1, candle 2. Okay. And that's the low. Okay. So you could have a candle 3. Now, here's the thing, though. If you don't like the fact that candle 2 closes close to the bottom of the range, because typically that's our take profit, that's only 23 pips, you don't have to trade this. Okay, there's no guarantee that it's going to retrace and then come down. It could do a straight drop, it could ride. We don't know what's going to happen. But if you don't like where candle 2 closes in relation to the bottom of the range, don't feel like you have to trade it. Okay, you really don't. All right, so but let's go ahead and keep going here. I'm sorry, I got a price alert. Let me just see what that was about, because I am in a live trade right now. Okay, that's cool. I'm still in profit. All right. Okay, so let's see what the next day brings. This would have been Thursday. And look at that. It just swept both sides. Okay, so, you could have just, if you didn't like this close of candle 2 once again, you could have just skipped that day. No problem there. All right, let's get that. Now, when price sweeps both sides, I'm not a fan of that because it can go either way. So we don't know. So let's keep going. And this was another pretty much inside day. So this week was really just consolidation. That's why I like trading multiple pairs, because this type of price action is trash when it comes to candle range theory. Your best trade was still all the way back here on last Wednesday. And as we can see, Monday through Friday just pretty much consolidated. There wasn't really much to do here, at least on the daily chart. There may have been something on the 8 hour, but daily, nah. All right, so let's keep going. So now we have a break to the downside. That's good. This is what, Monday? All right, so let's see what we get next. Okay, so we have another one where once again it sweeps both sides. This could be, and here's the thing, this could be a candle 2 to the upside. The only thing I don't like about it, though, is that it already swept the range high too, right? because typically you like to see where price has not already gone up here. You're expecting price to do it. But since it did go all the way up here, don't be deceived because it could still work out, but the odds are a little bit lower than it was just if it was just a clean doji. All right. Some people call it liquidity. There's liquidity up here that's already been swept, and there's liquidity down here that's already been swept. So we like to see untapped zones, not zones that have already been tapped. So this would be a low probability trade to me. So ideally I would try to find something else on another pair. All right, but let's keep going. Let's see what happens the next day. All right, and it did play out. Like I said, it's a crapshoot sometimes, but that would have been a good trade for a candle 3. Now as well though, now here's what I do like. This is the candle range theory high. So for candle 4s, I like to see where price closes outside of the range. And it did that here. So you got 1, 2, 3, and it closed about outside the range. So this to me would be clear for a candle 4 trying to go long. Now we may or may not get it, but that would be my bias. And as you can see, if you were smart, you could have got some price to the upside. From the open price to near the high of the day was 90 pips. All right. So you could have got that before it reversed. That could have been a good long setup. All right. But now we have, or we could have, a new candle range theory to the downside. Candle 1, candle 2. Okay. So how much downside do we have here? If you want to measure to the bottom of the zone, you can. It's about 61 pips. That to me would be enough to take a trade down. It may or may not happen, but let's take a look. And not so much. It did sweep both sides. And so this was not a good strong candle 3. You could have got some, but it just didn't hit the range. And as well, you could get another continuation here. Now on dailies, let me preface this too. My catch is that if I'm trading the daily chart, I only like for candle 2 to make the low of the week. That was back here. All right. This is not a low of the week. So this is not something necessarily that I would trade, but is it still the pattern? 1, 2, and a possible 3? Yeah, it is. So we'll see what happens on the next candle. This would be what, Monday? So let's go. And see, that wouldn't have worked. So the way that I trade would be better because I'm playing off the low of the week instead of just the pattern all the time. I hope that makes sense. Because you're only going to get one low of the week and one high of the week. So when you're trading the daily chart, you only get one trade per week in one direction. You don't take 2 longs on the daily. It doesn't really work like that. Okay. So that was that. All right. So let's get rid of these drawings. And I'll tell you what, we've done enough of the daily. I'll go to a different pair and do some 8-hour ones. So we'll leave that. Let's go to Euro Yen. I'm going to do 8-hour and I'm going to pick a random bar. Okay. And there we go. Now, in this case, I don't care about the high of the week necessarily. All I need to see is the high of the day. So when I trade 8-hour charts, the only necessity that I have is that candle 2 must create the lower high of the day. All right. So let's get this going here. So that's 9. Okay. So what do we have here? Am I back too far? Yeah, this is back in 2004. When it goes back so far, it doesn't show any wicks. I don't like that. So let me try to get another random pair here, or random day. Because I just prefer to see wicks. Okay, so we're back in 2013 and we have wicks. All right, so that'll work. Okay, so let's see. What do we got? Let me get rid of this. All right, let's just start fresh. All right, so this is at 9 a.m. No candle 2s yet that I can see, or 4s. Okay, so here we go. We may have a candle. I'll just use this one line to mark highs and lows. Okay, so this could be a candle range theory setup, a 9, 5, and then 1 a.m. drop if this high of day holds. So let's see if that works. And it did spectacularly. That's awesome. So if you would have got in near the open price, you would have got 68, 70 pips or so out of that. So that's good. That's a good level. So let's keep going. Now, and it did close below the range as well. Look at this. Sometimes I forget about candle 4. Okay, so you got candle range theory high, low, price close below candles 1 and 2. So in my mind here, I will be clear to go ahead and look for a continuation short. Will I get it? I don't know, but it's possible. Okay, and not much. You would have got some if you could have got played off the high of the day here, near the high of the day, maybe another 50 or so pips, 40, 50 pips out of that. Okay, so we'll get rid of those. And that's it. After candle four, I do not look for any more continuations. All right, so let's keep going. All right, so let's go ahead. Nothing there. Nothing there. Okay, so we could have a candle two here. See, we got the high of the day at 1700, which is 5 p.m. Eastern Standard. And again, if you want to measure the ranges, see how much downside there is from this close. There's about 23 pips, which isn't a lot. Now, sometimes I do teach that small ranges could lead to small candles can lead to big ranges, but that's typically for the entire range. If this range candle was like 30 pips or less, then that could give us a possibility of a breakout because it's so small. This is about 50 pips, so may or may not work, but let's see if the high holds. Nah, consolidation. All right, so there was nothing there. Okay, so let's see. We have sweep of the downside, which did create the low of the day. Here, this is at 5 and then 1. So let's go ahead and see if there was any action to the upside. And there was. Okay, so you got 1, 2, 3 right there. Okay, candle 1, candle 2, candle 3. This is the 8-hour chart. Okay, if you would have got in around the open, could have got 25 pips or so, which isn't a lot. Kind of low for Euro New Zealand. I mean, Euro Yen, honestly. But there is a possibility of a candle 4 because price did close above the high of candle 1. So anytime you see that, it's possible that it could continue. So let's see if that happens. Not so much. Okay, only a little bit to the upside. So we have a new fresh high of the day here for Thursday. We move these here and here. All right. It's always good when candle 2 closes near the candle range high. But again, these can go either way. So, but you do have a range, possible candle 2. So let's see what happens. All right. So the high of candle 2 got swept. So remember, when the high of candle 2 breaks, null and void. Okay. Null and void. Now, this could be a two candle range theory. So you have candle 1, candles 2 and 3. I figure are both contained in this candle because it swept the high, closed below. Okay, sweeps the high, closed below. It also created the high of the day. So I would be comfortable taking this short because it's a two candle. Let me see the amount of the range as well to see if it's small. It's about a 31 pip range. So yeah, there is pretty good odds of a continuation downside. Will it work? I don't know, but let's see. Okay, and it did not. All right, so that would have been a loss. All right, and that's fine. So let's see, and then what we have now is possibly a new candle range theory play where you have the range candle here at 1, 9. Now this is going into Sunday, Monday. Yeah, I'll still trade them, but you definitely don't want to hold these over the weekend. I just strongly recommend against that. All right, but yeah, there we go. So we did get some upside price action. That's awesome. Now I would not look for a candle 4 here because it did not close above candle 2 or candle 1. So it just is what it is. I take this. I'm happy with it. And that will be that. So let's find one more and we'll be done. We'll save one more winner. Okay, so is this one? Okay, it did create the high of the day. It's a close one. Let's see if this high is going to hold here. And this would be the low. Absolutely not. Complete breakout. Now this is good because use a stop loss, okay? Your stop loss should be your no-go zone when price closes this close to the high. Okay, the candle range high. See, and it didn't even close below it. But I would have been fine with this because it only closed above candle 1's high by not even a whole pip. Right? So I will see this as a false breakout. I would have no problem taking this to the downside. However, because it only retraced 4 pips and then took off. See, this is why you have to know candle 3 behavior. Candle 3 behavior dictates that it should be a straight drop, right? But at a bare minimum, your no-go zone, or at least you know you're wrong when the high of candle 2 gets taken out. That's why I say that. Don't keep trying to short if you're wrong here, because as you can see, anybody who went short got killed. This was a breakout to the upside, and it went 37 pips. Okay, so losing 5-10 pips is better than losing 30. All right, so but let's try to find one more winner, and then we'll be done. More price to the upside. Okay, a spike down, but that's not a candle 2. It just it just dropped. It is what it is. Okay, so this could be a candle 2. We'll put a low right there. Didn't give anything. Use your own discretion on this type of stuff. If it consolidates, there could be another candle that will go to the upside, but I don't like seeing this. I'm just going to be honest. I give it one. I like to give it one candle. If it doesn't show me what I want to see, I'm out. But so I'm going to go ahead and get rid of that and just wait for the next one. All right, so we got a bunch of small ranges, so eventually a big candle could be coming. This could be a high here. It did make the high of the day. This was at 5. This was at 1. The range, let's see, is 53 pips. So not exactly tiny, but remember, small candles can lead to big candles. So let's see what happens. Again, another tiny one. See, it barely broke outside the range. Again, that's kind of like what we saw back here with this consolidation. I'm not a fan of consolidation. This zone technically is still valid. If you want to hold it, that's up to you. If you would have taken a short play. So let's keep going. All right, and now it's giving us some price action to the downside. These highs are holding. Now that right there would be my red flag. Okay, it did tap that low and then closed up here though. So I will frame the range off here and here. All right. Okay. Low of the day being created right here in the 1 a.m. hour. And let's see what happens next. Okay. And then it hits this is candle 3. All right. Closed right at it. If you want to try for a candle 4, let's see what happens. Yeah, you got candle 4 price action too. All right. So there you go. But yeah, so it's real easy, guys. That's what I like about the candle range theory. It's the easiest trading pattern to see. And if you just trade off the highs and lows of the day on the 8-hour or 4-hour chart, I mean, you'll get some right, you'll get some wrong, but you'll know where your stops are and your take profits are. High of the range, low of the range, low and high of candle 2. It's really hard to mess up. So I appreciate your time and attention. Thanks for watching. Have a great rest of your day. Take care.